Welcome back to Squawk Box. Rick Santelli here live at CME HQ on this important Friday with some key breaking news. Personal income and spending for December, including some of the Fed's favorite metrics. First look at fourth quarter GDP, and the numbers should be populating. We're going into this with yields moving lower. And on the GDP side,
hold it right there. If you're watching this video, you're trying to figure out what's going on with these things, right? Well, here's what we got going on today. We have the PCE, the number one inflation number that the Federal Reserve monitors. That's coming out today. We have the GDP, how robust the economy is growing. That's coming out today. Hopefully, we might have a decision from, are the tariffs legal? So we have all this information coming out today. So it's a big day today. But today I want to show you guys all the economic news that Rick has for us this morning that will be affecting these things, because here's what he's going to go over. He's going to go over these things right through here. Now, two pieces of these out of the three just came in today. Okay, so we got the GDP, how much the economy's growing. Well, you can see it right through there. That was like 4, right? Well, it's coming down quite a bit. Then on the PCE side, actually, that number went up as well. We were 2.8, now we're at 2.9. I think I called it yesterday. I said, don't be surprised if this thing goes up one tick. So let's get back over to Rick to see what's really happening in the market today, and I'll show you instant market reactions to all this as soon as he's done. So Rick, buddy, take it away for me.
a big disappointment. We're looking for a number around the 2.8 area, comes in at 1.4. 1.4. 1.4 would be the lowest GDP since the first quarter of 25 when it was negative, slightly negative, around 0.5%. Now, if we look at consumption, comes in as expected, 2.4, but that's about a full percent less than the sequential look at the final read last quarter. 2.4 would be the lowest since also the first quarter of 25 when it was 0.6. If we look at the pricing index, not good news here. 3.6, we were looking for 2.8. 3.6 is 0.2 lower sequentially, but much higher than expectations. 3.6 would equal where we were in the first quarter. We got down to 2.1 in the second quarter of 25. Of course, last quarter is higher at 3.8. Finally, if we look at the PCE core pricing index, 2.7, 1 tick hotter than expected, 2 ticks cooler than the rearview mirror, which was 2.9. Personal income up 0.3, exactly as expected. And last look, it's upgraded to 0.4.
Okay, I'm going to stop it there for you. You might be sitting there just thinking, what in the world did he just say? So let me go over to the economic calendar, and I'm going to show you what happened today so far. And then we're going to look at the bond market. We're going to actually look at the equity markets to see how things are faring today. But here's what happened today. Well, let's rewind a little bit. Here's what the Federal Reserve and the markets are looking at. They're looking at the jobs market and inflation. Okay, we got all this stuff this week. Okay, so initial jobless claims came in yesterday. They were 206, actually better than expected. The continued claims actually came on a point as well. So we got the jobs market pretty good. Now, here's what we were waiting for, the PCE. This is the number one inflation gauge that the Federal Reserve monitors. And here's what we were looking at yesterday. The number year over year was 2.8. They expected it to go 2.9. Look at last night's video. I came in and said, I'm going to say it's probably going to be at 2.9. It might even go a little bit higher than that at 3. This is the January effect I'm talking about. The PCE doesn't take housing. The housing equivalent rents is deep in this, and the same thing with oil. So these are why these are a little more volatile. But this is what's happening. I'm saying the January effect, I'll say even the February effect, it's going to push inflation short term in 2026 up. Then it's going to cap out about 2-3 months in. Then we'll start to come down, and we're seeing a lot of that coming into fruition now. So let's look at all this. And then the other thing that came in today was the GDP. Was it 4.4? That's a crazy number. They expected it to come at 2.8. It came in at 1.4, which you have to do. Why the markets aren't going to really react too much with this. The government was shut down. Remember? The government was shut down. What they're saying is that took out about 1.1 to 1.3 bite out of the GDP. So just think of it this way. If you add that back into here, you're going to get 2.7-ish. It's right in point where they were expecting it. So the GDP wasn't a shock at all. And I think if you follow my channel, I don't think we expected the PCE, we expected it to go up 0.1, maybe 0.2 ticks. So for us, this was actually news that we thought was going to happen. So now let's get over to the markets to see how they're faring. So here's the bond market. No, it's not as detrimental as you think. So here's how I follow the markets, folks. So if you're new to the channel, it's pretty simple. That number right up through there, it says MBS and then 100 100.24, and then it says minus 0.04. All you have to understand is if that number's green, it means rates or bond prices are going up. When bond prices go up, yields come down. Since that's a mortgage bond, mortgage rates will come down. That's red. So when prices go down, that means rates go up. So green, good, rates going down. Red, bad, rates going up. So that's what we're seeing right now. So not a huge move in the markets. So did they anticipate this? Well, let's get over to the Fed watch tool. Let's see if this was 94 yesterday. So this is giving us what's the odds of the Federal Reserve cutting at the next meeting, or the odds of them not cutting at the next meeting. So you go down through here, and this is saying there is a 94. It was the same as yesterday. So you go to the probabilities. We had at the beginning of the week, we time-stamped it, and we said the probabilities of a rate cut for this year or the next meeting, there was a 90% chance they weren't going to cut. Now it's a 94% chance cut. So not cut. So let me go over and let me just walk you through the thoughts behind all this. So here's what the Federal Reserve looks at. Okay, this is what the markets look at as well. But you're sitting on the Fed, and I love doing this to you because I want you to understand how this works and put it in your mind how they're thinking and the data they're looking at. Not what you're hoping it is, but take the data that we're given. Okay, so a lot of people are like, "Oh, those numbers are fake," and let's just use what they're given. Okay, so the PCE came in and it was a little bit hotter than expected. I was like, okay, that's going to be expected because of the January effect. Don't believe me? Let's just check Q2 of this year, and I'm going to say that's going to be back down to maybe 2.5 on the right way down. But then we got the unemployment rate, and it's under 5%. That's full employment. So 4.3 is still way under full employment. If you look historically, it's a good number. Here's basically going back years. Then you look at the GDP, and now you're saying, okay, GDP is starting to crash, let's put it that way. But we have a government shutdown. So if you add back all the GDP that was lost during that's what they're saying, a 1.3 on average, you're getting 2.5. It's still a healthy economy. So you have a healthy economy, a full employment, and you just have inflation still above 2 and going the wrong way. So are you going to cut? No, you're not going to cut. So what's going to go on with rates? Nothing. Because there's nothing really to spike rates. Well, the tariff news might. So let's take a little bit of a dive into what might happen with tariffs. So if you hear tariffs get passed or not passed today or over the weekend, here's the most logical outcome of this. The markets are waiting for a decision. Then once they have a decision, now they're saying, okay, now we have an idea what the president can do. Now hopefully there's going to be guardrails. That's what I'm thinking is going to happen. There's probably a 25% chance of this passing as is. So the most logical outcome is they're going to pass it with guardrails. The guardrails are going to help the markets say, okay, it's going to put Trump and his administration in guardrails. So now we know inflation at least has some guardrails. Okay, so that's going to probably help the markets, and it's going to help bond yields, my outlook. So we're going to watch and see how tariffs come by. But the news we have so far today is telling me the economy isn't crashing yet. It's a K-shaped economy, unfortunately, and that's why I do my channel, to help you guys understand these things. So if you're a homeowner right now, go to my website real quick. I just want to show you guys some tools. Even if you're a home buyer, I'm going to give you maybe even some free tools. So if you're a homeowner right now, you're probably thinking, okay, does it make sense to refinance, or I'm drowning in debt? Should I pay off my debt with my mortgage? What should I do? We have a rate watch tool right up there. It says rate watch 2.1. Plug in your information in there. If you're looking to just, drop your rate and save some money on the payment, that's what that's for. It's going to say, okay, you're going to tell me, Dan, I want to refinance when rates hit 5.5. Well, I'll call you, I'll text you. But wonder if rates go low enough that you can save $200 a month, $300 a month. Put it in there. You can actually put in how much money a month you want to save, and we'll track that as well. But if you're a home buyer, what do you think is going to happen in the spring, 2-3 months from now, or down the road? Nothing really, folks. Because if we go to the probability section of the Fed Watch tool, and let me see if I can find it right through here. Look at the probabilities of rate cuts. At the next meeting, they're not cutting. The meeting after that, there's an 80% chance they're not going to cut. But it's all dependent on this news. The news is, what do people watch? Inflation and jobs. Inflation's higher than they want. Jobs market steady, not where they want it to be, but it's not falling off a cliff. So it's low hire, low fire. So we have high inflation, jobs market that's okay, and an economy that's chugging along pretty decently. What would you do? I wouldn't do anything. So that's what I'm calling for. I'm saying rates aren't going to move. So if you're looking to buy in the spring, you're looking to build down the road, just get prepared. Make sure you're getting approved, not pre-qualified. Make sure you don't use one of those big box companies, because they're going to just pigeonhole you into one product. I'm sure we can get you a much better rate, because my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. My slogan here is one application, one credit pool. We're going to compare your loan over 30 lenders. Why? Well, when you're looking at or you're watching me, you're thinking, okay, I'm watching mortgage rates. So how are you going to apply for a mortgage? You're going to apply at that bank, that credit union, that lender, this over here. Go to bankrate.com. You're going to have your credit pooled 100 times. You're going to get all these quotes, and you're going to be like, you're going to be as confused as when you were watching Rick Santelli. So reach out to us. I've been doing this for over 35 years. I'm licensed in all 50 states as well as Puerto Rico. And the cool thing is when we do get you approved, we have almost 40 other lenders. We're going to work with them and get the right program for you and making sure we have the lowest rate and the lowest fees in the markets for you. And that's what we're going to do for you. So if you need help with all this, please reach out to us. But the big news for today is right through here. The GDP, it missed. We had other information right through here that came in that's saying, okay, the economy's not all that bad. The big news that might be affecting these later today, because I don't think really the news that did come out today so far is affecting these, is tariffs. So if we have breaking news on tariffs, I will do a live event to show you instant market reactions to these. I really don't know which way it's going to go. So it could go really good, really bad, or it might just be a hiccup or a speed bump along the way. So subscribe over there. So every time I post a video, you get an alert and you can watch to see what's going on in the housing market, what's going on with mortgage rates, and honestly, what the heck's going on with these and why. So thanks for watching, folks. I will be live today if there is a tariff resolution. If not, I will see you Monday morning when the market opens to let you know what kind of goes on with these for the week and the whys behind it. Thanks for watching, folks. Have a great weekend, and I'll see you here next Monday. Bye-bye.